With news of an upcoming interest rate cut from the Federal Reserve, the stock market has been surging lately. But what do interest rate cuts mean when we start talking about mortgages and car loans and credit cards? A lot of folks wondering how this is going to impact them. Well, here with some timely answers to all of that is with some practical financial advice as well as money and business expert Derek Kinney. Derek, thanks so much for being with us.
My pleasure, Jason. Always great to be with you.
So we've been waiting a long time for the first cut in rates to come along. It has taken longer, I think, than a lot of people thought. What do you think at this point is causing the Fed to lower interest rates potentially as early as September, as the expectations are going on Wall Street right now?
Well, the Fed is sort of like that teacher that reviews the report card and gives a grade to good citizenship and how you're doing in science and math. And what they're looking at is jobs numbers, inflation numbers, corporate earnings numbers. But the main thing they're focused on, Jason, is the cost of goods. What does it cost the average American who walks into a grocery store to buy food for their family? And inflation numbers are coming down. Because of that, the Fed meets September 17th and 18th. What most people expect is a quarter-point reduction right now.
Okay, so let's say that they do that and we start to see that, move its way through, what we see as consumers. How does this impact people, let's say, who are shopping for a home? A lot of people have been sitting on the sidelines here waiting for mortgage rates to go down. Mortgage rates, of course, are a little bit different than interest rates, but what can those folks expect once we do start to see interest rates coming down, Derek?
Couple weeks, but we're going to see interest rates come down. They were already trending down, but this is going to take it down further. But here's the bad news for our viewers. We're going to see a more competitive home buying market, meaning that even though interest rates are going down, doesn't mean the price of the house you want is going down as well. So you want to do some creative things. Think about writing a letter, telling your story to the seller. That can be a very compelling way to stand out among competing offers, but definitely will cost you less when you go to finance that house.
Yeah, because if you've been waiting on the sidelines for a couple of years, kind of put off by those higher mortgage rates, a lot of other people have been doing that too, and they're going to be joining you out there once they finally see, some significant movement on that. Let's talk about car loans next, Derek, because boy, those have been messy the past several years, especially, for people trying to get into a used car. What will consumers start to see when they go to buy new vehicles, though, after, we see a rate cut?
Yeah, already at the end of the year, we begin to see specials because card lots want to clear off last year's models to make room for this year's models. What my prediction would be is that over the next 30 to 60 days, you're going to see a lot of competitive pricing on cars and trucks because inventories are getting better, but also interest rates, if you finance, especially longer term, are going to be very, very attractive as well. So you're going to see a lot of specials there. If you are in the market for a car, ideally buy a pre-owned one. That way you save money and you save on the interest rate as well.
Yeah, I saw a study the other day, Derek, that said that even more people were waiting to buy a car than have been waiting to buy a house, waiting for those rates to come down. Let's talk about credit cards now. This is not a great situation for a lot of folks, but the average adult right now carrying somewhere between $2,000 and $10,000 in credit card debt. How does an interest rate cut affect credit cards? Because a lot of people, need as much help as they can get in that department right now, Derek.
That's right, they sure do. And so most credit cards have a fixed interest rate that doesn't vary based on what the Fed does, but some cards, especially ones that charge higher interest rates, have what's called a variable rate. So those actually go up and down with interest rates. So for people with those types of cards, they may see interest rates come down. Here's what I would suggest though. Look at ways to move the money that you've got in a higher interest card to a lower interest card. So you work hard for the money. We want to make sure your money is working as hard for you and not paying high interest rates. We want to get the better rates, but not pay the rates.
All right, working hard for that money for sure, Derek. We'll have to check in when we finally see if September is the month that they finally do it with these rates. Thanks so much for being with us, Derek.
My pleasure. Thank you, Jason.